Ladies and gentlemen, good day and welcome to Technoplast Limited Q2 FY24 results conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not guarantee of the future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Rohit. Good afternoon and very warm welcome to everyone. Thank you for being on the call of Technoplast Limited. We are happy to have management with us here today for question and answer session with investment community. Management is represented by Mr. Bharat Kumar Vageria, Managing Director, Mr. Raghupati Tyagarajan, Full-Time Director, Mr. Sandeep Modi, Senior Vice President, Accounts and Corporate Planning, Mr. Hemant Soni, Vice President, Legal and Corporate Affairs. Before we start with the question and answer session, we'll have opening comments from the management. Now I hand over call to Mr. Bharat Vageria for opening comments. Over to you, sir.
Yeah, thank you, Vikram, for the introduction. I just take one more person who is also available in the conference call, that is Mr. Vishal Jain, who is now taken in the board of the Technoplast last year itself, and he now become the active member in Technoplast. So he also would like to participate in this. Now, good afternoon to all of you. And on behalf of management, I would like to tell you belated Happy Diwali in the new year, and our best wishes to do such type of the earning calls in the period ahead together with a lot of happiness and cheeriness. Now, we are here essentially to talk about results for the Q2 and half-yearly one for FY 2024 and outlook for the rest of the year. We are pleased to report healthy growth in top line and margin in FY24, driven by good demand in the first half of the fiscal 2024. On a year-on-year basis, volume grew by 18%, which is again above our estimates, and further, revenue grew by 16%. This has been driven by good demand from the intermediate bulk containers, robust growth in CNG composite business. It's 111% compared to same period of previous year. EBITDA and PAT also witnessed a significant growth of 22% and 34% respectively, driven by increased share of value-added products. And this is going to be happen continue, because the value-added product share business is going to be faster, as the growth is also estimating over 30%. We continue to focus on increasing revenue shares of value-added products, which is now 25% of the total revenue, as compared to 23% the corresponding period last year. While strong growth in our value-added product, we are highly optimistic of a strong performance for the whole year. Please note, this, whatever current revenue is value-added 25%, we are estimating to reach it 35% in the next 3 years' time, because the growth will be faster and the good growth will be in the value-added product. Other products which will go around 10 to 12%. Now, coming to the financial numbers, the results are already announced, but I will just walk you through some of the key financial and operational highlights. During Q2 FY24, on a consolidation basis, you will find sale 1,195 crores as against 1,024 crores last year. EBITDA 167 crores as against 134 crores last year. PAT 70 crores as against 50. In terms of the percentage, you will find a 70% increase in sales revenue, which India 18%, overseas 13%. India some percentage is higher because of the value-added product sale. Composite mainly the higher growth is there. EBITDA increased by 25%, PAT increased by 41%, which is seen from 50 crores to 70 crores. EBITDA margin was 14% as against 31.1%. That is 13.1%, which is the improvement of 90 basis points compared to previous year. And again, it is further improvement in the even last quarter also, June quarter. So during the H124 on a consolidation basis, half-yearly basis, sales is 2,275 crores as against 1,969 crores. EBITDA 315 crores as against 258 crores last year. Profit PAT after tax is 127 crores as against 94 crores. Key highlights for the first half compared with the corresponding period previous year. Net sale increased by 16%, India 17%, overseas 13%. Volume increased 18%, India 19%, overseas 15%. EBITDA increased by 22% and PAT increased by 34%. In the HY 2024, EBITDA margin was 13.9%, as against 13.1%, increased 80 basis points. Again, I would like to share one thing with my all valued investors. In the first Q1, always we do business of 22%. Q2, we do 24%. In first half, normally we do business in the range of 45 to 46%. In the balance half, always we do business of 55%. So that will give the EBITDA margin expansion every quarter and quarter on quarter also.
The person you are speaking with has put your call on hold. Please stay on the line.
Then share of business, established product versus value-added products. Value-added products grew by 28% in HY FY24 as compared to HY FY23. While established product grew by 12%, the share of the value-added product is 25% in total sale of HY FY24 as against 23%. And this percentage is going to be continued, as I mentioned to you. Indian overseas business in the same range, I think 65 to 35%, and the previous year it was 64 to 36, because India value-added products are more, and in overseas we do only the packaging products. EBITDA margin, India and overseas, yes, India margin, EBITDA margin point of view is 14.1%, and overseas is around 13.2%. Debt stood 766 crores as against 811, so reduction of 34 crores, and that is also going to be continued as the company is earning, operating profits are there, which is going to be plugged back in the company. So repayment quarter on quarter is going to be continued. Yes, one additional thing I would like to update about the improvement in the ROCE. Overall ROCE, even though half-yearly ROCE not comparable, but even though we have worked out, ROCE in the first half is 14.1% as against the last year same period was 11.8%. Full year ROCE at the end of the year we are targeting 15.5%. And at all, as we have also estimating our revenue for the next 3 years, overall objective of the company to reach the ROCE around 20%. So every year we are estimating to increase by 1.5%, and that is by way of a combination of the various things which we have discussed in the various calls also. Improvement in the working capital, improvement in the margins, improvement in the sale of the value-added products. So these all combination of all will give the increase in the ROCE. Yes, CapEx in the first half we have seen 99 crores we have incurred, which includes expansion for value-added products. So CNG, IBC put together is around 59 crores, and for normal CapEx, automation, re-engineering, and to maintain the capacity is around 40 crores. Total CapEx full year estimated, looking to the current ongoing process, in the range of 175 to 190 crores. Further, I know that my valued investors, existing and the prospective, would like to know what is the status of this sale of the overseas business, which last time also we had mentioned. 2 continents, 2 geographies are on the advanced discussion, advanced stage. Majority stage this investment will take place. And entire transaction also, we are definitely making our best efforts to complete in this FY24 only. And we are also internally targeting to handover process for the overseas with the new partners also can be started from the January 2024, beginning of the new year also. So that we are discussing with the joint venture partner. The details of the JV agreements are under discussion and going to be finalized soon. In respect of these profits, we have already discussed many times and we have not changed any objective. This includes repayment of debt, capex for the LPG, CNG, hydrogen, and to meet the market demand, and also use to the benefit to the existing and the prospective shareholders. Now, another thing I would like to bring update, because in the last, I can say, quarter or in the 6 months, management identified certain additional non-core or non-performing assets, which last year it was in the 40 crores. Out of that, some assets have been disposed of, taken place. But some additional assets have been identified, and which is in the range of around 100 crores. And that management is keeping target to sell off and use these profits. And internal policy is making it by March 31, 2025, non-performing asset should be zero. That's the internal target we are keeping it. So the money can be used for the best, put for the use, and the return can be increased. Now I would like to open the floor to answer the specific questions. Thank you to all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we'll wait for the moment while the question queue assembles.
There are more than 20 parties in the conference.
The first question is from the line of Aditya Jhawar from AJ Capital. Please go ahead.
Yeah, thanks for the opportunity. Great quarter, I would say. Sir, my question is on just now we have said that for the second half we are going to hit 15% margin, right? 15% ROC, right?
Yeah.
So then the margins currently should go up, right? So currently we are at 13% margin, 13 to 14% margin, and it will inch up to 15 to 16%.
No. Sorry. Okay, you complete your question. I will answer. Any other question, or this is the question only?
Yeah, this is the first question on. Can you clarify a bit on this?
Yeah.
And the second part is you are said that you are in the advanced stage of the subsidiary or some of the we want to sell, right, overseas business. In that, what would be the value addition that also will be going into basically that also will be reduced, right, in the value addition. So could you clarify that detail, that how much revenue will be lost, or what is the value addition that will be going into that? So these are the two for now.
Mr. Jawar, I think one thing is that in the Q1 we have seen my EBITDA margin was 13 point, last year it was 13.1, and this year was 13.9%. It is now Q2 we have seen 14%, and overall year also we are estimating more than 14% in the EBITDA margin. So you will see the expansion of 20 to 30 basis points every quarter, because the value, as I mentioned to you, in first quarter we do business of 22%, second quarter 24%, third quarter 26%, and the fourth quarter 20%. So margin, if I can say, range between 13.5 to 15% range is there as far as this year is concerned. As a management, we are keeping target of around 14%. It may be plus side, maybe 10 or 20 basis point upper side, then we'll do the end of the year. Now, you are asking me about the valuation part. Yes, JV partner is under discussion. So exactly, if you recall, in the last time also we had mentioned, we have a overseas business 100%. Out of that, percentage wise I can say, USA we do 20%, 50% business in Southeast Asia plus Taiwan we do, and 30% business in MENA region. Southeast Asia business, which is existing manufacturing operations in 5 countries, and that 5 countries we are talking, and US countries which we are talking, the 2 continents we are talking, which we are under discussion with the JV partner terms and conditions. Valued part is concerned, I think it was already last time when we were talking. If the valuation worked out, approximately valuation, exactly will come out and we will disclose that way because it's still under discussion. But yes, when we will reach on the definite agreement, JV agreement, all terms will be finalized together. Roughly, I can say we were estimating for 100% valuation in the around 1,000 crores. But as we have mentioned that we are diluting around 80%. So maybe all put together maybe around 800 crores. Then you see the regional wise, continent geographic wise I have given to you. So we will 20% will continue for the balance period, and we can exit as per the terms which we are under discussion, maybe 2 years or 3 years, we can exit 100%. But definitely that outcome will, as I mentioned to you, is going to be materialized and is to be completed in the current financial year itself.
Okay. But how much the contribution is from the value added in these subsidiaries or these areas?
I tell you, in value added product we do in India only.
Okay. So it's not in any.
So therefore,
but the IBC capacity, what is our total IBC capacity?
IBC capacity, in fact, every country wise the different capacity. In India, we are manufacturing at the 4 locations. And IBC capacity percent wise also I can tell you, in overseas, we manufactured IBC in 7 countries out of the 10 countries. In India, we have a manufacturing plant at 4 manufacturing plant in IBC. As a capacity wise, every plant has a different capacity. But my capacity utilization also, if I tell you, in the western region it is around 80 to 90%. In south region it is around 50%. In other part also it is around 80%. So IBC is a certain minimum size capacity we need to put it. Right?
Okay. But when we are selling this joint venture, then this capacity will also go to them, right? That is what I'm trying to understand.
Which one?
So when we are selling our subsidiary or the venture.
No. You, as I mentioned to you, you are talking for example, IBC business is 10% of my total revenue. Out of that, 50% we do India and 50% there. So if you take the overall size of the revenue, IBC revenue, which will go from the value-added product, it is only 5% of the total business.
Okay. Got it.
No, not major. Because major business we have seen of the composite product, that is LPG, CNG, that type of all cylinders.
Sir, last question I have is on the revenue part. If you see that we are in the range of 1,000 to 1,200 crores,
yes.
Then in order to achieve that ROC of 15%, since the margin also will be stable, that means that in the H2 we'll be doing much better sales. So what is the revenue internal target do you have for this year?
If you tell me internally, I've given the whole year target of cross 5,000 crores.
Okay. Great. In 2 to 3 years, what is the revenue target you have in the mind? But I would say that commendable job, sir, on all the segments. I'm saying that there has been a fruitful improvement in financial statements and in the strategy. Yeah. I think thankful for the management.
No, I'm clear with you. We are learning from such your type of the investor only, because whenever we find some problem, they want a explanation. You will find next time we will include that in our presentation, and we try to include in our earning call also.
Yeah. So what is our this year target? We are internal, but what is achievable this year? 5,000 crores is achievable, sir. Do you think that?
You see, I mentioned to you, in first half we do 45% business, second half 55%. You can calculate. It's very simple. First half I have given to you already.
And can you explain in the 2 to 3 years how much revenue we can get here, sir? How much is the TAM for? Where do you see the last growth coming from? Composite cylinders, or how much growth can come year on year for 2 to 3 years perspective? That is my last question.
Of course, you are right. The composite product, which is current year estimating over around 500 crores above, So if you ask me the only composite product, next 3 years' time, it will grow over 30%. Other products will grow around 10 to 12%. So combined growth definitely will be more than 15%. That's the internal estimate we are keeping it.
Okay. So you are saying that composite cylinder this year we are going to do 500 CR and it will grow 30%.
Yes, of course. Going to be continued.
Great, sir. Great, sir. Sir, in this composite segment, are we thinking of auto segment also in this year, because that is also a bigger market, right? Are we having any strategy there?
Of course, strategy is there. Therefore, the new expansion is coming. Currently, we don't have a capacity, and we are not offering to them, and we are not there. But yes, it's a process, approval process, internal testing process is 8 to 12 months time. So looking to my expansion next year, which is already committed, we are definitely started approaching to them. Auto sector is a big sector, very huge market, which is currently catered in CNG line. It's a metal cylinder only.
So next year we can expect from the auto segment also should contribute?
Yes. Yes. In the second half year.
All the best. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Priyank Parekh from Abacus PMS. Please go ahead.
Yeah, thanks for the opportunity. Sir, wanted to understand how much capacity we are adding in Dahej for IBC.
In Dahej is already added already. The capacity is already added. It's I can say annualized pieces. You ask me 1.8 million, 180,000 pieces.
180,000 pieces. Okay, so we will be having some 600,000 IBC capacity overall, right?
Oh, you are talking me all put together in India?
Yes, yes.
Yes, Modi. Yes, you are right.
Okay, got it. And sir, wanted to understand what is our competitive edge in IBC business specifically in India, because there is another listed player who is also expanding aggressively in IBC. So what is the sort of competitive advantage we are having?
Well, admittedly, IBC is a internationally recognized product. The very fact that GNX as a brand of the IBC is being manufactured by us in about 11 countries, gives you an idea as to what is the kind of global reach that we have. Most of the IBCs that we sell are used to pack the chemicals and get exported. So the recognition of the brand is very good among the importing parties wherever they are. The moment they know that the chemicals are coming in GNX brand of IBC, then they are having a huge comfort factor. Any other brand coming in the market will take their own time to grow. So we are taking necessary steps also to counter any such threats also from competition. We are now having presence in about 4 locations already. We will continue to scan the market and see as to how we need to grow so that a localized presence will also help us gain competitive edge.
Okay, got it. So I just don't want to get into specific details, but can you give me the broad idea on what are the sort of things we are doing to keep us ahead of the competition?
On the IBC front, I have covered the gist of what we are looking at. The details and the strategy is not something that I can discuss on the phone, right?
Okay, fair enough. Sir, on the LPG cylinder side, we are currently fulfilling the 7.5 lakh cylinder orders. So when we are expecting that to complete?
So still we have a time. 1 year more time we have. Already time is extended.
Okay, so wanted to understand, apart from that order, are we fulfilling any other order as well for LPG?
Yeah, in fact, yes, we are under discussion and we are expecting some, because that present utilization and we are supplying to IOCL, another gas distribution company like BPCL, HPCL, some private gas distribution people are also there. So we are also talking to the other gas distribution companies. And now it is very well accepted in the market and good response is getting. So definitely other government two companies are also discussing and they should come out with their requirement. We've already submitted our sample and trial and tested is already finalized with them.
No, so wanted to understand the revenue we are seeing in LPG segment. Is it that from the single order that we are talking, or it is from multiple orders?
No. I tell you, the IOCL has given the order to two parties, to us and the Supreme together. Now that order we are in the process executing already. They have a right to increase the quantity. That right they have kept with them. Further, BPCL, HPCL will also come out. But in addition to that, I will tell you that we are supplying to more than 48 countries these LPG cylinders. Already we have approval from that countries and my export is continue. And we have added certain, some of the, I think 6-7 countries newly added in this recently in the last year and this year together.
Okay, got it.
India market, we are looking at export market also.
Yeah. So that I wanted to understand. Sir, for the CNG side, can you give me the specific timeline by which the 600 cassette capacity will be available for use?
I think on step side I can say it should be made available from Q2 of FY24, FY25.
Okay, Q2 of FY25. Okay. Okay.
For that, place is identified, activity has been started, all approvals, consent, construction activity, because these are going to be consolidated at one place. It is in Gujarat, nearby the Vapi area only.
Okay. Sir, so the current order book of 225 CR for the CNG, so what is the sort of volume we are delivering for that order?
No, it's ongoing process. Every month we are supplying them because every company give us the time for supplying of the 6 to 8 months delivery schedule they give us. So my current order book is adequate to supply in the current financial year.
No, so my back of the envelope calculation says it is around 320 caskets we are going to supply from that order. Is it right way to understand that thing?
I think you have seen in the first half we did FY24 almost around 170 we have done it. And
okay.
Balance also we are expecting to close all of the year where it is there. Yeah? 200 more. So around more than 300 will be there. Yeah.
Okay. Sir, just a small request. If from next quarter...
Sir, may we request you to come to the queue for the follow-up question?
Yeah, just last one thing. Just a small request, sir. If from next quarter onwards, can you separate the LPG and CNG the volumes? Can you give them separately, because the realization for both the parts are quite different.
I tell you, it is very difficult because casket also different size of the caskets are there, small and big casket. Cylinder also you will find LPG cylinder 2 kg, 6 kg, 10 kg, 20 kg. So from the numbers to make and to divide and get the per kg casket or per kg per cylinder rate is very difficult. What we are giving you LPG, yes, we can provide at least LPG. This value and CNG value can be given. But then in any case that we are providing. Because there is a difference. From next year onwards when I will sell to auto sector only cylinder, then the different value will be different. Today is a single product we are selling as a casket, therefore we are able to provide you this number. But yes, revenue-wise, as we have mentioned to you, and in last call also we said my existing investment in CNG, an existing capacity, we can do business around the 325 crores. And as far as LPG is concerned, we can do business in the range of 220 to 240 crores in terms of the value revenue-wise.
Okay, got it. Yeah, thank you.
Thank you.
Thank you. The next question is from the line of Jignesh Kamani from GMO. Please go ahead.
Hi, sir. Just an update on the CNG segment. Our order book has declined from around 245 crore to 225 crore quarter on quarter. So are you seeing that flow of inquiry in the CNG cascade has reduced?
No, it is not reduced. In fact, it still is 10 crores here and there, doesn't make difference because every month execution is on. And we are also looking at the current capacity. If somebody wants, if we don't have a capacity, so it is not, means we should not take now. We should tell them very clearly we will be able to give you supply in the 2024-25 itself. But yes, there is 5 and 10 crore here and there. It doesn't make order book because we have a healthy order book. And if you have seen in the first half, as we did business of 130 crores already, and estimating 200 crores, 225 crores orders in hand. So we are covered entire financial year already. And further, every month also we used to receive the order. So that is going to be continued.
Understood. And second thing on the 600 casket addition, earlier we were expecting by fourth quarter of 24. Is there any delay? Now so it's delayed by close to around 6 months. So is any reason why there is a delay?
No, there is no delay. But what he mentioned, when it is come for the commercialization, because I'm telling you commercialization point of view, it will come in the Q2 or by 25. Process have already stated because identification of the premises, identification of the machine took time already finalized, but we are keeping 2 or 3 months in hand in a conservative way. But in any case, the project has been finalized, location has been finalized. So there may be when this big type of the project where the investment of more than 125 crores are there, I think we will reality terms we will able to tell you the exact timing in the Q4 of this year. But he asked me the rough estimate, so I told him we should do the commercialization.
Understood. And last question.
Uncertainty everywhere.
Sure. Obviously.
Everywhere uncertainty globally is there. So we are keeping some contingency in hand.
Understood. Sure. And last question, if you take about overseas venture, which will be doing close to 100 crore profit this year. So as you say, around 1,000 crore kind of valuation. So why there is a aggression to sell it slightly lower valuation? Because annually we will generate at least 100 crore plus cash flow from overseas venture.
Let me check up. I think you are right. From your point of view, you know very well. When the family become big, we have to take the new house, we have to take the new partner, we have to take the new premises. I know very well my overseas business is growing and 10 to 12%, good EBITDA margin 13%, not bad compared to other businesses. But as I mentioned in my last call also, we are replacing business from 13% to 18 or 20% EBITDA level business. Another thing, we'll have to see our management bandwidth also. And we have also experience to take a local partner in each of the continent, then we can grow faster, then our management bandwidth will also be substantial. So every country has a good opportunity wherever we have a presence. You know that we have a presence in Asian countries, Thailand, Malaysia, Indonesia, Vietnam and Taiwan. Every country is growing because Taiwan, that China plus advantage is coming in that country. So we have no any compulsion, but at the same time I tell you, as a you investor, you are telling why you are selling it. Some investor comes and says, why you are not reducing the debt?
No, I'm not discussing on this why you are selling. I'm saying valuation which we are getting is very low. So rather than selling at the low valuation, better we hold on and whenever we get a right valuation, we can exit it, I'm saying.
I tell you, we have appointed the best merchant banker, the JP Morgan name is there. We are not doing that thing. We will take their advice and we are doing it.
Understood. Sure.
International player. Yeah.
Sure. Okay. Thanks a lot and all the best.
Thank you. The next question is from the line of Siddhant from Omkara Capital. Please go ahead.
Yeah. Hi. Thank you for the opportunity and congratulations on the good set of numbers. I just have a few questions. So firstly, on the LPG cylinder side, sir, are we looking to expand this capacity considering we are already running at 85 to 90% utilization in it and considering the extension of the IOCL order of 750,000 cylinders? So in the next, by FY25 or 26, are we looking to expand the capacity after having multiple talks with gas distribution companies?
You can tell me any other questions or this is your questions only?
Yeah. Secondly, I wanted to understand from.
Then I will give you the answer together.
Yeah. So secondly, I wanted to understand from the CNG cylinder bit, like considering we are running at around 85 to 90% capacity again with a healthy order book. So are we having any more orders in queue for the utilization of the 600 cascade expansion, or the orders will start coming in now? These are the two questions.
Okay, fine. I think you have a good questions, but if you have gone through the policy which have been given on our site, that is the government has made out policy 2020 policy. There is very clear CNG business, and in gas sector, automobile sector is a huge opportunity. Total size of the business is around, in cylinder itself, 28,000 crores, which includes metal cylinders, composite cylinders. There we are estimating, is 8-year policy is there. There we are estimating this business can be LPG and only CNG business can be more than 2,500 crore business in the next 5 years' time. So we are trying to catch up that business. In looking to expansion, yes, expansion, if you have heard in my last talk, we have said expansion is on process, already signed up, but it takes time process because machinery and delivering, supplying is the time-taking process. So already we have ordered in the beginning of this year itself. So CNG expansion is ongoing. Now you have asked about LPG. I accept that thing. We are running currently 80 to 85% capacity. But I tell you, Sita, on the basis of the one customer, we cannot take the decision for the expansion. Let two other people, gas distribution company, HPCL, BPCL should come out. Then we will talk, because we don't want to depend on the one customer itself. Even though currently we are supplying export to the other countries. We are keeping our eyes open. We are watching regularly. LPG expansion, definitely, if in case two orders comes, we can think on the H2 of FY25, not now. My first priority to do the CNG business expansion, which is order book is healthy, and every month new inquiries coming because of this allotment have been given for the CNG gas stations to various parties.
All right, sir. Thank you. And sir, one more question. So we recently got the approval for Type 3 cylinders used for oxygen. So are the manufacturing of that, is it included in the 600 cascades which we'll be putting up, or in the 480 existing cascade capacity?
It will be happening from the existing capacity.
All right. And the last question regarding the EBITDA margins for composite cylinders. So could you just give a view on segmental EBITDA margins?
I tell you, that's the point. We have a crisscrossing, because we have some common infrastructure facility where we do blow molding, injection molding, composite molding, all put together. So it is very difficult. But internally, as I mentioned, if you have heard, in composite product, EBITDA margin is ranging from 18% to 22%. Exactly EBITDA margin is not possible, because at one location, various products mixed together. Then it's to making the final product, I have to use the different processes. Injection molding, blow molding, extrusion, all processes involved there.
Right, sir. So, and lastly, just on the IBC segment, at what level of growth are we estimating in the for FY25 and 26? Could that be somewhere in the range of 17 to 18%?
Over 15%, I can say roughly. Yes, over
15%.
Yes.
So that includes all our manufacturing plants and even overseas?
No. Overseas, I mentioned you separately 10 to 12% growth in packaging, because overseas we do only packaging product, which is increasing the IBC. But I'm talking about the India part is concerned. There, the normal packaging product, which we call as the plastic drum, jerrycan, we can estimate a growth, chemical company growing 10 to 12%. We can estimate that only, as the chemical volume growth is there. But definitely, as the export from India is increasing to the other countries, therefore we are estimating IBC growth. And as my partner has mentioned, Raghupati has already, the Genex has created brand in the 11 countries. Many customers in overseas written in their correspondence itself, they want material packed in the Genex brand itself, because we are the member of the international collection centers also.
Right.
So that's, we are estimating over 15% growth.
All right, sir. So thank you for answering all the questions, and I wish you all the best for the next half of the year.
Thank you. Thank you.
Thank you. The next question is from the line of Aman from Aman Investments. Please go ahead.
Yeah, sure. Sir, am I audible? Okay. Okay, sir, my first question was, I just, the first question, on the Tesla order for VLTD, have you supplied them the orders fully, sir? It was unable to track that supply as well. If you your comment. And second question, I wanted to get your, sir, am I audible? Hello?
Yeah.
Perfect. Perfect. So on first one, on the supplies of Tesla order VLTD, and also your outlook, any further orders or any other further agreements have we had, because telecom sector is also applying these batteries in their new towers which are coming in various places. And second thing, I wanted to get your outlook on commercial vehicles, because due to energy generation, transportation requirements, commercial vehicle is being seen as a good sector, a growth sector. How do we see it? Because we are supplying fuel tanks, oil tanks, and other plastic-related products, hard plastic-related products to them. How is this sector turning out to be? And also, is there any development in irrigation sector, substantial development for our infrastructure products in polymer products category?
Aman, I think you have mixed up so many things together. And one thing I'll tell you. You are asking about the battery business. There is a separate subsidiary company business where they do. We are focusing on solar batteries, railway signal batteries, industrial batteries. And yes, we have a capacity to manufacture telecom sector batteries. But if you tell me the 10 years back, telecom sector business was 80%, which is currently reduced. You know the reason. Telecom companies were not maintaining their tower properly. They were not demand. The battery was very down because of their own revenue were affected. So we are now focusing on the solar, railway signal, and industrial batteries. And as far as this batteries is concerned, it's a small part of our overall revenue. We have discussed last time, and we have mentioned it at the right time. We will also have a plan to exit. But yes, as far as company is concerned, it's a revenue in the range of 120 to 150 crores. But yes, the existing potential with a certain modification, revenue can reach to the 300 crores. But as you heard in our last call also, we have a more focus on the value-added products. So definitely, if you ask me 2 years down the line, we may not continue this as far as battery business is concerned. But yes, if the company is a self-survival, self-maintenance is concerned. Now, another thing you ask about the infrastructure development, yes, irrigation we don't do, but in infrastructure related activity we do PE pipe, which is a good demand is there. If you see my last earnings call, where we have mentioned previous year we did a 200 crores business. Currently here we are estimating more than 250 crores business. At our present capacity utilization, we can do business of in the range of 400 crores. So definitely this business will do the expansion when we reach the business of 400 crores. Now, the business which we have talked, infrastructure, yes, development is on. Have I left anything from your question?
Yeah, yes, sir. Commercial vehicle, I just wanted to understand.
You have taken the right. On the commercial vehicle, we have certain automotive industry relationship. You and we all know very well this industry is growing more than 15%, but we don't do the commodity product for the automotive sector. We do some specialized product for the commodity, and that is continue to development with the close relationship with the OEM directly.
Okay. Sir, just a follow-up question on the CNG, on the composite cylinder side. Sir, just wanted to understand, we do end-to-end production of cylinders, and what is our market share in India, because we were the first one to start.
So you are talking about the CNG?
No, composite cylinders, sir, LPG cylinders.
LPG cylinder, yes. We make these cylinders and offer it to the gas marketing companies like Indian Oil, Bharat Petroleum, and HPCL. So they are the ones who buy the cylinders. They fill the gas and they market their gas in these cylinders. So that's
the application comes.
Yes, sir. What is our market share? Because I assume it will be enormous.
Well, frankly speaking, when we look at the overall size of the market for LPG cylinders, they are in excess of 40 crore cylinders, right? So our share of business, when we talk about in the entire market, is minimal. But as you would appreciate, the composite cylinders are an emerging option which is being preferred by the users, and that is growing rapidly. So as on date, my market share on the composite side would be in excess of, in India it should be in the region of 75 to 80%. And globally we are trying to reach out, so that's a difficult number to put at.
Okay. Sir, just wanted to understand, because do you think, is it a transition phase for composite cylinders? Because certain challenges are there in accepting the cylinders, whether it be deposit money or any other local or retail challenges. How is government supporting to overcome, and is the force from the government side also very much pushing, or are they in a stage of very complacent manner?
But the initial experience has been very good. People who are handling these cylinders are also appreciating the fact that composite cylinder being light in weight gives them a lot more convenience and advantage. Both the people who are involved in the trade and distribution, they are happy. The customer is happy that he doesn't have to no longer handle a heavy cylinder inside the house. The woman feels very empowered because they don't need a man around when the cylinder is being changed. That's all of these are being very well appreciated. The lightweightness of the cylinder is good. The attraction of the cylinder is good, and above all, it's a very safe cylinder. This cylinder does not explode unlike a metal cylinder. So that's the reason as to why the composite cylinders are fastly emerging as a very good option.
Okay, sir. Just the last question. Usually, our mix of polymer products and composite polymer products, plastic products or composite, has been in the range of 60 to 40. Going forward, do we see the same mix going forward, or will there be a change, or do we presume there to be a change?
As I mentioned to you, as the value-added product, which includes composite product, LPG, CNG, and all other composite products, including IBC, percentage of business, which is currently 25%, is going to be increased. I mentioned to you, we are estimating it will be more than 35% in the next 3 years' time. Even though all other products will also grow to 12%, but this composite growth percentage will grow more than 30%.
Okay, sure. Thank you, sir. All the best, and happy Diwali.
Thank you to you.
Thank you. The next question is from the line of Mahendra Jain from Way to Wealth. Please go ahead.
Hello. Namaste Bharat ji. हैप्पी दिवाली सर, हैप्पी दिवाली, और विशेषकर विशाल जी को भी हैप्पी दिवाली। अनिल जी का सपना आप लोग सभी पूरा कर रहे हैं और बहुत नजीक पहुंच गए। सो हार्टली कांग्रेचुलेशन टू ऑल ऑफ यू, लाइक योर टीम।
थैंक यू।
सर, मेरा प्रश्न था रिगार्डिंग दिस, वी आर हैविंग होल्डिंग ऑफ 75% इनटू टीपीएल प्लास्टिक। So that whole today's market cap is around 400 crore of TPL Plastic of 100 crore company. So are we planning anything to get benefit for the shareholder of TPL or Time Technoplast? In what way we are like with it? How we will resolve this partnership?
Why to resolve partnership? I tell you, बेटा कमाओ के बाप कमाओ, पैसा तो घर में ही आता है ना. He's our son. TPL Plastic is 75% subsidiary. So that company earlier was doing jerrycan and drums. Now they have launched IBC also. And Time Technoplast has already created a brand in IBC. So whatever business Time is going manufacturing, that benefit is going to technology benefit, advantage, experience benefit will go to TPL also.
Okay. But as we are restructuring, like in a way,
No, that's nothing to do. Currently, in current status, I can tell you it is going to be continued business as it is ongoing separately, because TPL Plastic contribute 8 to 10% of my entire consolidated revenue. That is to be continued. We can decide after 2 or 3 years, we will decide to consolidate packaging business, but currently it is not on the paper or nothing is there. Nothing is discussed at all. It's going to be continued.
Okay.
But yes, we are going to get the benefit of the experience of the Time Techno team for the way of the product expansion. And you have seen TPL presence wherever Time is not there. TPL also put up their plants all over India.
Okay.
because the benefits company is getting to continue, so the business is continuing separately.
Okay. Okay. Thank you.
Yeah, thank you, Mandra.
Yeah.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital India Private Limited. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So this year, we were targeting to reduce the debt by 150 crores. So in first half, we reduced by 34 crores. So are we on track to reduce the overall debt by 150 crores, irrespective of, let's say, international business sell or not sell?
You are right. When we will learn what we do, we have to repayment debt first only. Yes. It's going to be continuous process.
So this one, sir, are we on track to reduce by 150 crores?
At the end of the year, my answer is yes.
Okay. And sir, in your opening remarks, you talked about that value-added product contribution will go from 25% to 35% over next 3 years. So, presuming, sir, after 3 years, let's say value-added contribution go up to 35%, then at that point of time, what will your EBITDA margin look like?
If you ask me, even though it is not visible, but something we can work out on the paper, maybe over 15%, maybe in the range of 15 to 16%.
Okay. And sir, what is the value of the overseas assets on the balance sheet right now?
So it is going to be expansion by 30 to 40 basis points expansion will be there.
Okay, in the EBITDA margin?
Yes. So similar effect will come on the PAT also.
Okay. And so lastly, what is the value of the overseas assets on the balance sheet right now?
Exact figure I don't have currently, but I think what you are asking me?
What is the value of the overseas assets?
Value of the overseas assets may be in the range of 700 crores around. 700 crores around.
Okay. Thank you so much, sir.
Yeah, thank you.
Thank you. The next question is from the line of Mehul from Navuma Wealth. Please go ahead.
Good evening, team. Thanks for the opportunity and congratulations on great set of numbers. My question is, sir, you had guided for working capital, reducing targets you have given for, next 3 years, you should be reducing. So is it that we have exceeded target or, we should be in the similar fashion, going forward? Because there is,
I mentioned, I think you met me also, and I told you the last time also, every year you will find improvement in the working capital cycle time. Internally, I can say next 3 years' time, I am keeping target of net working capital cycle time 90 days, which is currently in the range of around 105 to 107 days is there. And you have seen quarterly also, we have quarter on quarter is improving. As the sale of the value-added products are increasing, this benefit is going to be continuing.
Yeah, so my question, sir, I got it. What I am asking is, in first half, there has been significant reduction in terms of, working capital cycle. So is it that we should be exceeding that, reducing even further to 90 days over 3 years, or, it should be, meeting that,
No, it is going, I think you will find the improvement of, you will find the improvement of 3 to 4 days every quarter, or every year at least. Because you have seen, when you are growing more than 16%, then also some working capital engagement will be there, but in number of the days, it is like, what is the working capital days? 107, no? Yes. So at the end of the year, if you will see, I am keeping target of 100 days. So you will find the further improvement in the next half.
Okay, so 90 days, we should be meeting, not exceeding that.
I am quite hopeful. If you see, this year maybe 100 or 102 days. Next year you will find 95 days. Then after you will see that. Every year you will find improvement as the value-added share is increasing, and we are ourselves some discipline we are maintaining. We are arranging some kind of the product. We are talking to our customers also, so giving certain benefits and give us our money on time. At the same time, we are talking to creditors to give them more credit. Because now you know that everywhere globally also, now market is open for that. So many opportunities are available. You can negotiate. Good companies are coming. New manufacturers are coming. So you negotiate the better terms.
Sure. And sir, in terms of this value-added products, wherein IBC is part of it, so I believe 1/3 business is in domestic and 2/3 business comes from overseas, if I'm not wrong, of IBC.
In IBC, not exactly that, but you will find 45% business in India and 55% overseas from IBC parties concerned.
Okay. And how are EBITDA margin over there? Is it similar or in somewhat?
Oh, I tell you, EBITDA margin may be different countries different. So overall, we are considering EBITDA margin in the 13% for overseas. But India, yes, maybe as I mentioned, the value-added product, 3 products are there with different margins. So maybe in the range of, I can say, 14 to 16% EBITDA level.
All right. Thank you. Thanks for your reply.
Thank you. The next question is from the line of Ganesh from GK Advisors. Please go ahead.
Sir, can you hear me? I am audible?
Yeah, clear. Yeah.
Okay. Thank you for the opportunity, sir. Couple of questions. First thing is, we are doing well on the CNG expansion and taking measured steps, but looks like most of our revenue and profitability growth, at least on the value-added side, is coming through CNG. Is there a risk of kind of putting all our eggs in one basket? That is my first question.
No, I think your question is not clear. We are not putting any one basket. At the business, what we are talking about, the CNG?
Yeah.
Oh, CNG, you see the size of the balance sheet. CNG, what we are doing? CNG, my total existing plus expansion, both put together, maybe in the range of around 200 crores investment. And we are estimating revenue of 800 crores in the next 2 years' time. And 800 crores revenue, if you ask me the 2 years down the line, when my total revenue will be in the range of around 5,000 crores, excluding the overseas business, then it is hardly 15% of my total revenue. I don't think we are not. We have, you know that even we have de-risked our business, the product wise. We have a packaging business with the 70%. We have a infra-related P-pipe business, which is always 7 to 8%. We have a battery segment, 5%. So segmental wise, we are quite de-risked. Even country wise also we have de-risked. We have presence in 11 countries. So
among the
de-risk their entire businesses.
Among the value-added business, since LPG has kind of hit a ceiling because of various reasons, okay, because not much offtake from the OMCs and all that. So most of our growth on the value-added side is coming to some extent in IBCs plus to the largest extent in CNG. So I was just asking that if there is a risk of CNG also becoming like the LPG situation, or there is a bigger enough market that CNG can grow well for a lot more years.
I tell you, I don't consider this. It's a good opportunity for the composite product impact. My partner Raghupati will expand to you. Whether it's what.
The CNG business is here to stay for at least for the next 7 to 8 years. As you would read the government policy itself, they are very, very clearly advocating the use of natural gas as an option to petrol and diesel. So that drive is there, and accordingly they have formed their policies. The allotments have been made for distributing the CNG business among the different CGD companies, and that they are firmly in place. So if the opportunity comes our way, we would like to grab it with both the hands. There is no doubt. The other end of the piece of the cake is also the fact that these businesses will go to encompass the automotive application additionally. That will also come in when my expansion is in place, and we are also getting ready to partake in the hydrogen demand that will also come up in the next 2 to 3 years, right? So we are making sure that we are readying ourselves in terms of technology upgradation, whatever is required to capture these emerging opportunities that are there. So from a risk point of view, I think there is a minimal risk to participate. The demand that is coming your way is a very natural way to grow the business.
Got it, sir. Thank you. Just one more question, sir. Most of our raw materials for at least our value-added products, I am assuming they are all imported. So is there an opportunity available that they may be available, at least not, if not now, in the subsequent years, available locally, and thus make our raw material costs lower?
I think your question is right and genuine, but I tell you, the development of the CNG cylinder took place almost 4 to 5 years. Now, the inputs we don't change frequently because trial and testing procedure involves crores of rupees for the trial and testing. So if you see the world over also, we are also following the international companies' practices who are trial and tested products available. If you ask me today, if you ask me the composite products availability of the raw material in India, I have not any visibility, at least for next 2 to 3 years. But yes, for my requirement, we have made an advance contract, we have made our tie-up, so there should not be, when my order book is there, I should not have a shortage of the raw material. And that is also at the reasonable price terms agreed with them, and therefore we have made a contract with them. So we don't see currently availability in India. After 2 or 3 years, we can't say anything because some of the specialized inputs are there.
Got it. And I'm assuming the capability is not there yet for the required quality also.
Yeah.
Got it. That's all from my side, sir. Thank you. Thanks a lot.
Thank you, Ganesh.
Thank you. The next question is from the line of Rupen from RN Associates. Please go ahead.
Yeah, thanks for the opportunity. Sir, I have one question. See, currently we are at an advanced stage of, monetizing the Southeast Asia region and the US. So, Middle East, MENA region, so would it be fair to assume that in FY24-25 we would be, monetizing Middle East as well as a certain non-core assets, as you alluded in your opening remarks?
I agree. All will run parallel. You are right. As the two continents we are talking on the advanced stage means that the terms are under discussion, agreements are under discussion. But as you are talking and I have given the conservative timeline of March 24, yes, I am quite hopeful. At least I can say that 90% I am hopeful even Middle East will also be complete because process has started already 2 months back. So talk is ongoing. We have already signed the NDA, but I am waiting for the next process from the potential buyer.
Okay. So by March 24, you mean to say that total international business we would be able to, offload around 80% stake by March 24 itself, including the Middle East?
I am keeping hope. 2 is hope. If you ask me 2, yes. If you ask me third one also, I am keeping myself ready for that.
Okay. And the other non-core assets, I think that you alluded. So in FY25, you are hopeful of monetizing it. So
we have made a list. Now the process has begun. I have already discussed informally in my board meetings also. I have identified. I am keeping the responsibilities of the individual team, and definitely we ourselves has kept the target. By March 2025, we should have a 0 non-performing assets, whether it is in the form of the machines put in use, whether it is the form of the land or building or whatever may be.
Okay. And this particular, I guess, this non-core assets would be other than battery business, right?
Yes, you are right. I mentioned that battery business is definitely different because where the time has invested 65 crores in that business. That I have not yet taken into account.
Okay, yeah, that's it from my side, and all the very best, for future business as well as the monetization of international business. Yeah, thank you.
Yeah, thank you. Yeah.
Thank you. Ladies and gentlemen, we take that as the last question for today. I now hand the conference over to the management for closing comments.
Okay, thank you very much to all for hearing the earnings presentation. We'll come back. I think it will come back after this December result. No, it's meant in the February. Okay. In the February. Yes. Yeah. Yeah, we'll come back in the February again with a good number, and we need your blessings of all my valued investors to support as it is ongoing. And we do our best effort to fulfill the promises and guidance which is provided. Thank you once again.
On behalf of Phillip India Capital Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.